I fully believe that we're going to hit a new all-time high above 2,100 this year. But that's just a natural correction in the markets. I think this pullback is actually healthy. I think it's good for us in the long run, and it'll give us a chance to kind of accumulate some more metal before that happens. Because if you're not in gold before it hits a new all-time high, you're going to want to be in it immediately after.
Steve Barton, a gold analyst and trader with over 20 years of experience, recently appeared on Liberty and Finance, where he discussed his perspective on the future of gold and silver. During the interview, he predicted that the price of gold will reach $2,500 per ounce by the end of 2023. He based this prediction on a number of factors, including the ongoing global economic slowdown, the rising inflation rate, and the increasing demand for gold from central banks. Barton believes that gold is a safe haven asset that can protect investors from inflation and economic turmoil. He also believes that gold is a good investment for the long term, as it has historically outperformed other assets over time. During the interview, Barton noted the natural tendency of prices to come down after a run-up. He explained that when prices go up, it is often because there is a lot of demand for an asset. It is commonly observed that people tend to make purchases when prices are on the rise, which may not be the most advantageous strategy. However, looking ahead, the next few months hold promise for buyers, according to Barton's viewpoint. He believes that once the red line is surpassed, there will be little resistance, paving the way for smooth progress. Now let's watch clips from Steve Barton's interview with Liberty and Finance. Please make sure to watch the entire video and consider subscribing to our channel. Don't forget to turn on post notifications so you never miss any upload of ours. Thanks and enjoy the video.
So this is the gold chart. This red line up top here is the all-time high. And this is the one that you're talking about that just happened earlier in the month on the 3rd. And this was the Asian market where it just for a hot minute got right up above there. And now we're sitting just below 2000 at around 1980. That's the first support level here is 1980. We broke through that. And now the next support level is going to be 1950. And if you kind of go way out on this, there's basically the way you read these things is these support lines, when you go back over history and you look at the level of 1950, there's a lot of support around there, right? Well, it's looking to me like we're probably going to break through this 1950 and maybe even hit around 1900. That would line up pretty well with this 150-day moving average, right? And if we go to the monthly chart of gold, it also lines up quite well with the 20 and the 40-month moving average. I'm sorry, not for 1900, but back down to 1850. So this is the level that it could really hit. And honestly, looking at this reversal bar in the monthly, unless we get a shoot up here before the end of the month, I think that's kind of the level that it may actually settle down at. I really hope it doesn't get down below 1900, but if it does, we got a lot of support around 1850, and I think it'll settle in there before we go off to all-time highs. Fundamentally, usually when you have a run-up like this, it's very natural for it to come down. I think that honestly, I don't think this really even matters. I think it, if anything, to turn a frown upside down, this should be a gift. This is where we should be buying more. And I just went down to my local coin shop yesterday, and it's funny when the price of these metals is going down, at least here in America, people buy less, so that's when he's just stocked with a whole bunch of bars and silver coins. And when it's going up, he doesn't have any, so look at this as a gift. Most people buy at the wrong times, and they buy when it's going up, not when it's going down. So I think these next month, 2 months, maybe 3 months is going to be a gift for us. And this is the time of accumulation. This is the time to be buying, because once it gets above this red line, there is no resistance. It's never been done before. So there's nothing holding it back. This red support, or this red resistance line is extremely strong. So once it breaks through that will be the new support, and there's nothing above it to stop it. This price point right here back in 2011 was the height of gold. the last run up, and gold was about $2,000 an ounce. Well, right here, we're at about $2,000 an ounce, but the share price is 32, and over here it was 65. Okay, so that's just a double right there, and we're at the same price point in gold that we were back then. Now look at this. This is an even more leveraged bet. This is Junior Gold Miners ETF. Okay, right here we're at $38 a share. Look at the last time in 2011 when gold ran up, and it was up at 175. That's a 4x move, right? If you want to leverage these, the safety one, once you get your fear out of the way by getting a physical position in gold and silver through you guys, then you can leverage this with the gold miners. And, I like picking little entry points here, and I think we're coming up on another accumulation point in these miners where we can leverage that bet.
Moving forward, Barton confidently expresses his belief that the price of silver has the potential to surge to $50 per ounce by the conclusion of 2023. Taking into account the increasing demand for silver from industrial sectors and investors seeking to diversify their portfolios, Barton sees a growing appetite for the precious metal that contributes to his bullish outlook. Barton is not the only one who is bullish on silver. A number of other analysts have also made similar predictions. For example, Jim Rickards, a former hedge fund manager and author of the book The New Case for Gold, has expressed his belief that silver could potentially reach $100 per ounce in the coming years. Let's get back to the interview.
This one I am very excited about, and I have a lot more silver than I do gold. But I think, like Andy Schechtman says, eventually we're going to be wanting to be in gold. Maybe once that ratio, gets away from 70 to 1 and normalizes something a little bit more closer to 40 or 30 to 1. But as far as silver, the main levels right here, see, we got the 100 and we got the 150 moving average. It's bounced off of those. That's not a coincidence. But it is looking like a bit of a bearish signal here. See, this red 21 moving average is, unless something else happens, is going to cross over the 50, which is bearish. This white line here is the 10. I don't think most traders use this, but I like to use this because it shows you a little bit quicker of what's happening. Underneath it, we've got the 200, which is the strongest moving average, and that's going to be around $22.50. I fully expect us to hit that. I just had our gold expert on the show a couple days ago, and he actually thinks that there's a chance that this could get back down to 20. I honestly would love to see that happen because I think that would be another back up the truck moment. When we were hitting down over here, I was screaming to anyone that would listen, now is the time to be buying. The silver was $18. You could find it in some coin shops for $21 or $22 per coin. It was really, really a great accumulation period. So is this one at $20, and hopefully we'll get back down to that. But the real catalyst for silver is going to be when gold breaks above 2,100. Because when that happens, gold moves first and then silver follows. And when it does so at, 2 or 3 times as much. So that'll be really nice. Look at this period as an accumulation period. We are not in the S&P 500. We're not touching this. We were in it for about 12 years or so. And then once COVID happened, we just got out and moved our money into gold and silver. But as we see it here, it's broken through just slightly today, actually, and it broke through and went all the way up past 4,200. So that's significant. We'll see if it closes the day above there or not. But there is an argument here that this could actually go up to 4,400, possibly even a blow off top. Now, to put this in perspective, fair value right now for the S&P 500 is somewhere around 1,800 or 2,000. That's where it would be kicking off about an 8 or 10% dividend. So we got a long way to go for this thing to go down. I don't want to touch anything in this, but this is a very bullish looking chart. I mean, each of these moving averages, the 21, the 50, the 100, the 150, and the 200, they're all sequentially in order, which is very bullish looking. So I'm a little biased towards the upside right now, to be honest.
Gold and silver prices are expected to remain volatile in 2023, but overall they are likely to trend higher. The price of gold is expected to average $1,859.90 per ounce, with a high of $2,025 per ounce. The price of silver is expected to average $23.65 per ounce, with a high of $27 per ounce. The precious metals market is expected to experience fluctuations in response to various factors. However, the overall sentiment indicates a positive outlook for gold and silver as investment options. What do you think of Steve Barton's prediction for the price of silver and gold in 2023? Do you agree with his assessment? Please leave your comments and observations in the comments section below. Also, be sure to like this video, subscribe to the channel, and enable notifications to stay up to date on our latest videos on silver, gold, and copper. Thanks for watching.